It began in Montgomery, Alabama, in 1850, not exactly where you'd expect the story of a global financial powerhouse to start. But this is where three German immigrant brothers, Henry, Emmanuel, and Mayer Lehman, opened a modest dry goods store. Soon, they weren't just selling goods, they were accepting cotton as payment. That shift was crucial. Cotton was king in the American South, and by trading, brokering, and transporting it, the Lehman Brothers laid the foundation of a business empire. From cotton to capital, the Civil War devastated the South, but the Lehmans adapted. They moved to New York City and joined the booming world of investment banking. By the late 19th century, they were co-founding the New York Cotton Exchange and expanding into railroads, coffee, tobacco, and utilities. Lehman Brothers wasn't just riding the wave of American industrialization, it was helping to shape it. In 1906, the firm helped take Sears, Roebuck, and Company public. In the Roaring Twenties, it financed new industries, including aviation and entertainment. When Wall Street crashed in 1929, Lehman survived. Through the Great Depression and two world wars, it remained a quiet but powerful force behind American capitalism. Post-war boom and quiet growth. In the decades after World War II, Lehman Brothers evolved but kept a relatively low profile. It backed the growth of consumer brands and post-war infrastructure. But the industry was changing. The post-war banking world was consolidating, and boutique firms were being swallowed by larger conglomerates. In 1984, Lehman Brothers merged with American Express, becoming part of Shearson Lehman/American Express. It was a strange marriage, more corporate than collegial. Tensions rose. In 1994, Lehman Brothers was spun off again as an independent firm. That's when it really took off. The rise of a Wall Street titan. Under the leadership of CEO Richard Fuld, Lehman Brothers transformed into a major global player. Fuld, known as the Gorilla for his aggressive style, rebuilt the firm's reputation and expanded into lucrative new sectors. By the early 2000s, Lehman was swimming in profits. Its core business, fixed income, equities, investment banking, asset management, was thriving. But one area became its obsession: real estate. Lehman began pouring billions into mortgage-backed securities and subprime loans. It wasn't alone. Most of Wall Street was in a housing-fueled frenzy. But Lehman went deeper and riskier than most. It borrowed heavily to fund its investments, sometimes leveraging its capital over 30-to-1. In 2003, it bought 5 mortgage lenders, including BNC Mortgage and Aurora Loan Services. These firms specialized in subprime lending, high-risk loans to people with low credit. The market seemed unstoppable. In 2005 and 2006, Lehman reported record profits. Its stock price soared. Fuld was hailed as a genius. But behind the scenes, the foundation was crumbling. 2007, the cracks began to show. In 2007, the U.S. housing market began to turn. Subprime borrowers started defaulting. Lehman's exposure was enormous, but the firm downplayed it. Analysts raised concerns. Investors started to worry. Still, Lehman insisted everything was fine. In 2007, it posted a record $4.2 billion in profits. That same year, 2 Bear Stearns hedge funds collapsed, signaling deeper trouble across the market. But Lehman didn't slow down. In fact, it kept increasing its real estate bets even as competitors began backing away. 2008, the fall. By March 2008, Bear Stearns was gone, rescued from collapse by a J.P. Morgan Chase acquisition brokered by the U.S. government. The message was clear: no firm was too big to fail, but the government might step in to help if the stakes were high enough. Lehman's balance sheet was now under a microscope. Investors fled. Its stock price plummeted. In June, Lehman announced a $2.8 billion loss, its first since going public. Executives scrambled to raise capital and find a buyer. There were talks with the Korea Development Bank, with Barclays, with Bank of America. but nothing stuck. By September 2008, Lehman was desperate. On Friday, September 12th, U.S. Treasury Secretary Hank Paulson convened top Wall Street CEOs in a last-ditch effort to rescue the firm. But there would be no government bailout. Paulson was adamant. Wall Street had to clean up its own mess. On Monday, September 15th, 2008, Lehman Brothers filed for bankruptcy. It was the largest in U.S. history, with $613 billion in debt and $639 billion in assets. Shockwaves across the world. Lehman's collapse triggered global panic. Markets crashed. Credit froze. Financial institutions everywhere were suddenly in danger. AIG nearly collapsed days later. Merrill Lynch sold itself to Bank of America. Washington Mutual failed. The U.S. government scrambled to pass the $700 billion TARP bailout program to prevent a total financial meltdown. What made Lehman's fall so devastating wasn't just its size. It was the suddenness and the belief that no one would let it happen. Investors had assumed some form of rescue was inevitable. When it didn't come, confidence evaporated. What went wrong? There's still debate over why Lehman was allowed to fail. Some say its real estate exposure was just too toxic. Others blame Richard Fuld for refusing to accept lower offers that could have saved the firm earlier. Critics point fingers at regulators, credit rating agencies, and the general culture of risk-taking on Wall Street. The bankruptcy proceedings revealed just how complex and fragile Lehman's empire had become. It had over 900,000 derivative contracts, billions in off-balance sheet liabilities, toxic assets scattered across the globe. In the years that followed, Lehman's downfall became the defining symbol of the 2008 crisis. The legacy of Lehman Brothers. Lehman's fall changed the financial world. It led to sweeping reforms like the Dodd-Frank Act and tighter regulation of large financial institutions. Too big to fail became a household phrase. Risk management became a buzzword. Confidence in Wall Street was shattered, and it still hasn't fully recovered. But Lehman's legacy isn't just one of greed and collapse. For over 150 years, it was a pillar of American finance. It financed railroads, helped build the consumer economy, and shaped the landscape of modern banking. Its story is a warning and a lesson about how innovation can turn into overreach, about how ambition unchecked can lead to destruction, and about how, even after a century and a half, a single bad year can bring it all down. Lehman Brothers was more than a bank. It was an institution. And when it fell, it shook the world. Thanks for watching. Please comment and subscribe if you enjoyed.